Welcome. This is Power Trading Radio Live. Power Trading Radio Live, fueled by Online Trading Academy. For more information on the show, visit us online at powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. Merlin Rothfeld with you for your Hump Day Wednesday edition. A little bit of an about face, right? We started off with the first 2 days of this week with very small little ranges. We opened and closed right about the same price. Some market indexes with slight gains, slight losses. And all of a sudden today, you mentioned that 5-letter curse word that our politicians like to use. Shh, China. Yeah, China, again, in the news, causing a little bit of issues. Of course, I think we all expected that to happen. I'll dive deeper into what that is here in just a second as I round through our 7 markets. Also, let you know about our guest today. We're going to have Tilly Allison on the program. Tillie will be joining us from Kansas City, I believe. We'll talk about, all things financial markets. Tillie is well-versed in proactive investors, strategic investors, stocks, options, futures. Although Brendan, sorry, she's not a cryptocurrency girl yet. I'm trying to convert her. I'm pretty sure someday she'll move on over to the cryptocurrency side of things and see the interest in trading those. But we'll see what she likes to talk about on today's show. If you have anything you want us to address, you can send it in one of 3 places. You can go to powertradingradio.com. Click the button that says Power Blast. Those questions will come into the studio here, and we'll monitor those and hopefully answer them all on the air today. The other 2 places are going to be on YouTube. We're broadcasting live on 2 different YouTube channels. We have the Online Trading Academy YouTube page as well as the Power Trading Radio YouTube page. So hello, Unscammable. Not an all-time high today, but close. And hello, Brendan, as well on the Power Trading Radio YouTube channel. And then Dana. Hello on your Online Trading Academy YouTube channel. I'm sure there's others there that like to lurk in the shadows on social media. Feel free to join in the conversation. Send in your comments, questions. Hopefully I'll get to all those as we progress through today's show. All right, TJ's going to start me off with some charts here. We'll go look at the worst to first. Worst today was Treasury yields. You guys can see up here we had a spike up in the 10-year futures note. So that obviously is going to flip it over and convert to negative declines in the yield. So basically you had the yields drop by 2.69% today. Back on track. I think we're going to break highs as these yields continue to drop. We'll have to wait and see because we're a long way from those highs that we see going back into August of this year. The yield, though, dropped to 1.738. So for those of you looking to buy homes and looking at the real estate as a catalyst for our markets, good news is we're still below that 2%, which I'm sure many of you are probably fairly happy about. Hello, Sean, just lurking on Online Trading Academy's YouTube page. Bitcoin was our next one, B to the C. Again, not the best day. Actually, it's starting to rally up a little bit. It was down about half of 1%, a $41 slide. 8,086 is where it's at right now. Again, that number I'm referencing is just from the time we start this show yesterday. So from 3 o'clock yesterday, we're down only 41 bucks per Bitcoin, but still 8,086. I'm going to just show you the last year on this one so you guys can get a sense as to what it looks like. We don't usually look at the longer term time frames here, which we should. And this goes right back to what we talked about with some of the charts yesterday. I know there was a question about, which one was that? It was either the South African Rand, Japanese Yen, or some other currency pair you guys wanted to look at yesterday and asked what we should do. I think it was the Euro dollar. Bottom line is this one looks like it's a sell for crypto. It's a sell for Bitcoin. Yes, it's up 82% in the last year. But bottom line is it's been drifting down since June of this year and making lower lows and lower highs. So right now you're kind of in the midst of this downtrend. We'll have to wait and see where it goes. But certainly this low it achieved a few days ago, actually a few months ago, October 23rd at 74.50 becomes that next target out there on Bitcoin. So that was your number, that was number 6. I got my numbers written out wrong there. That's number 6. So number 5 is going to be the NASDAQ. TJ, bring back up click. We'll go look at the NQ futures. Here are the NQ, the NASDAQ 100 futures contract. You can see a little bit different picture than we saw with some of the other indexes. It's actually, again, to me, a positive sign. Notice back here. I want everyone to look at this chart at home that, remember we have a lot of people at the gym right now. Hope you're all having a great workout right now. If we go back into, let's say, November 14th, right? You guys can see we have this open and close right on the same price, a long bottoming tail, small topping tail. That is a positive sign. Same thing the day before and the 2 days before that. So you can really see this the same candle we experienced today happen 1, 2, 3, at least 3 times in the last couple of weeks, maybe 4 times. And that's just a sign of strength. Even though we did look at the markets were down fairly decent at one point today, they still rallied up and closed near the highs. Now the NASDAQ composite was down 0.5%, but it was down much, much more than that earlier on in the session. So closing price for the composite was 526 on the day. Russell 2000 also struggling. Here is the RTY futures contract. Bounced right back up, and now we can almost just say this flag is no longer valid. It's just basically like sideways consolidation. So Russell 2000 was at 1,591. That was a slide of 0.42%, although it looked a lot better than the other market indexes. You look at this, it had a red candle, but it wasn't down as much. Technically, I said better, I meant worse. This is worse than the NQ, right? Because the NQ closed near the high, had a long bottoming tail, which means there was buying at the end. This one really closed near the low, so there was no kind of bounce back up here in the Russell 2000, which finished at down 0.42. All right, podium time. Number 3 is the S&P 500. Now, the S&P shows a picture that's very similar to the NASDAQ, although it's weaker. I know it's number 3, but it's still weaker because of where it closed at in relationship to the previous 2 days. We've had these spinning tops, right? These little, what some people might call doji formations on Monday and Tuesday. Today we had a long bottoming tail on this one, which actually ended up putting it down very close to down 1% on the day for the S&P 500. It did manage to claw its way back, brought it almost back to break even. It was down 0.38 when all the dust settled at the end of the day. That finished the S&P at 3,108. Now it's a couple points below that right now in the after-hour session, but still up about down about 0.38% on the day. All right. So we got equity markets looking pretty weak. Well, let's go check out the commodities. Gold taking our silver medal today. It dropped. Remember yesterday gold was your gold medal winner. Today it's the silver medal winner. We have a couple of lines. I'm just going to leave those lines on this chart in case we end up hitting some of those because those have been in there for a while now. Gold on the day. 1,472 is where it closed at. That is a slide of 0.16%. So out of our top 7, 6 of them are negative. Not a good sign for all the bulls out there. But let's see. Is there anything noteworthy with the gold chart here? Not really. Brendan, thank you again for you sent me an email or a Power Blast yesterday with a whole bunch of great information about gold, and yeah, certainly that article dealt a lot with people's expectations or thoughts about where it may be. I don't know if I necessarily agree with all of those points, but yeah, there are a lot of arguments we could say would be a catalyst for gold going forward. Certainly global instability would be one of the major catalysts for us, but right now looking fairly stagnant, just going sideways here for these last 5 trading sessions. We'll have to see if it challenges some of these supply zones we just kind of threw on the other day. All right, number 1. CL, crude oil. And hey, you know what? All it takes is a couple of protests in Iraq and blocking some key roads out there. We talk about, anybody got a neck brace? This is whipsaw action right now. I don't know what it is. Scamble, I love how you try to put words in my mouth. Yeah, this is that's not a bullish flag on RTY at this point. But no, equities still look strong. Today was actually, I think I made that point. The RTY looked weaker today than the NASDAQ and the S&P. S&P and NASDAQ both had great hammer formations, which are a sign of strength. So, we had a knee-jerk reaction today, which brought those markets down, but ultimately recouped a lot of those losses, which, of course, is a sign of strength, even though we were down. So crude oil is the topic du jour. Yeah, a couple of strikes out there, blocking some major thoroughfares to some oil fields and to shipping ports, and all of a sudden, boom, you get a nice spike up in crude oil. On the day, you're up 3.08%. So conveniently, the second-place finisher was down 0.16, and we leapfrog all the way up to 3+%. It was a gain of $1.70 per barrel to $56.91, which may not seem like much. We just basically erased all of yesterday's losses in one candle, brought it right back up here to almost where it opened up at on yesterday's trading session. So all in all, not the worst day out there, or the worst 2 days. At the end of 2 days, you're looking at going, nothing really changed out here. Yeah, I'll bring that one up because Unscamble says you guys drew a bullish flag. We did, but right now, so here's part of the problem why it's stopping becoming a bullish flag, okay? First off, the flag's gone on for a long time, and notice that it's actually kind of closed outside this trend line. If I was to continue this trend line, of course, what we could always torture a chart, right? Like, oh, we could move it to there, now it's still a bullish flag, but the point is, we can make this thing go out forever. It's losing its luster, and think of this. From a visual perspective, TJ put I like boxes. TJ's the box fan over here. So we're going to put a box on what would be deemed the pole of this flag, okay? So you guys can see this, whatever color that is. I think that's magenta. I'm kind of colorblind, but so bear with me. That's the pole. That's the impulse. That's the surge. That's the momentum. That's the power. That's the direction pushing in that Russell chart. And it happened very quickly, right? You saw a pretty big move on the Russell. We went from a low of about 1460 to a peak of about 1613. Now, it's not the best move it's ever had, but it's still a pretty strong one. And then all of a sudden, things start to traverse sideways. in a bullish flag formation, what it's trying to convey is, here you have a moment where this security is just simply pausing, and then it has another surge up or in the direction of the pole. In this case, since the pole is up, the logic would lead me to believe that this was going to move to the upside. Sadly, though, it's just traversing sideways, right? So if this momentum was in fact still there, and there was a lot of positive sentiment about this specific security, it wouldn't traverse sideways for much longer. So the longer it does this, the less it confirms, or not confirms, the more it breaks down the surge that happened before it. So it was a bullish flag. I kind of am throwing in the towel on this one. I mean, it almost feels better as if we take this box here that TJ has drawn and just draw it around the current price action. And this is the thing about technical analysis, guys. It's very subjective. I know that some of you are going to go, nope, still a flag. That's fine. That's okay. For me, you're either looking at that range right there or maybe even cut off some of those topping tails, and you're really looking at this kind of compressed range right here. I mean, notice that the vast majority of the body of all of those candles move right through there. If we start another bull flag from here, we have the last 97 times. Well, we haven't the last 97 times. That would be an incorrect statement on Scamble. We have certainly had a lot of bull flags. There have been a lot of bear flags on this chart too, going back the past few years. But bottom line is, at a certain point, you have to look at a flag pattern and say it's no longer a flag pattern. It doesn't mean it's not going to go up. It's just the validity of that flag pattern starts to diminish. All right, I think, did we already do it? We already went through. So that means our guest, Tilly Allison, is going to be on the phone waiting for us. We're going to take a quick break. When we come back, I will get her on the horn. If you guys have specific things you would like us to address, we got the charts flowing over here. TJ, the chart master, is on point today with his drawing skills. So if you have something you want us to analyze for you, let us know what it is. Send it on in at powertradingradio.com and click that Power Blast button, or go to our YouTube channels, which is Online Trading Academy, as well as Power Trading Radio's YouTube channel. We'll be right back after a short break.
There are lots of different reasons why I teach. I know what it's like from the beginning because I was a student here. I love going around the classroom and you get those aha moments where, you know, slowly those light bulbs switch on as the week unfolds, and for me it's magical.
I've been telling students for years that I derive professional satisfaction from sharing my knowledge about trading. I grew up on the floor of the Board of Trade. My father was my first mentor.
I like to see people run, and in order for them to run, they need to walk well first. And for me to help them build a solid foundation and then watch them go forward, that's something that money can't buy.
What these people are now realizing is the freedom that they have always wanted to achieve. And it's a quite humbling and honorable experience to be able to know that in some small way I contributed to them.
The students make the academy. And I meet wonderful people from all walks of life, and they always have a story to tell. And the story is always interesting.
Being able to explain things in a way where the light bulb goes off, and that gives me the chills. It's a wonderful experience to see that growth in somebody else and that you're a part of that. It's magic.
The students, I really want to enable them to bypass the challenges that everybody goes through.
There is rather a selfish aspect, and that selfish aspect, as I have found, more of me as a person. Just a self-discovery.
And in every class that I teach, I get to share my knowledge, and I get to see each and every one of my students learn how to trade in a bull market and in a bear market and even in a sideways market. And each time I see that student of mine take that first trade, it's such a rewarding experience. It's awesome.
Welcome back to Power Trading Radio Live and your host, Merlin Rothfeld, with today's special guest.
Hello everybody, welcome back to Power Trading Radio. It is your Wednesday edition. It's hump day out there. Hope you're enjoying a Wednesday afternoon that offered at least a little bit of fireworks out there for the intraday guys. The last few days haven't been that great. Today, we had a lot of great intraday action, some nice moves. Certainly, there was a lot of opportunity abound, much more so on an intraday basis than what we saw for Monday and Tuesday. All right, our guest today hails from Kansas City. We have the lovely and talented Tilly Allison joining us today. Tilly, how you doing?
I'm fantastic, Merlin. So glad to be here, and I want to give a shout out to some of our listeners here in KC.
You have a following of groupies out there, Tilly.
It's awesome. So today we were in class, and one of the students mentioned that pre-market, he was kind of seeing a few things. And I said, well, let's go ahead and run through the trade builder real quick, and let's try to set up some trades. So we got to set up some shorts on the Russell, and I heard you before the break talking about the Russell today, and just a really nice opportunity there to try to position short there on today and take advantage of that move down.
Yeah, there was a nice move down the Russell. It's interesting because when you look at those side by side, and this is the interesting part about understanding assets, is even though for the most part you had a down day for the indexes, there was one that was, from a trading perspective, clearly a better trade, and that was the Russell from a short side because it never had the real pullback. It didn't recoup its losses like the S&P or the NASDAQ. So when we look at relative strength, Russell today, guys, was the weaker dog, even though its percentage decline wasn't as fierce as the NASDAQ. Tilly, you mentioned that one of your students was saying they saw stuff in the pre-market. What sort of things were you guys looking at pre-market?
Well, I think like everyone, whenever we see intraday data or pre-market data, a lot of people are just real kind of anxious to want to do something. And we can all sense that, when someone's a little bit trigger happy. So I just wanted to make sure that we were able to see it from a more objective perspective and put it into the supply and demand logic of planning a trade, looking for supply, and thinking through clearly, okay, let's not focus so much on what is going to happen on the open. Let's focus more of what's going to happen after the open and kind of where the market's going, and to plan accordingly so we can see it from more of a bird's eye view than, market opens and what do most people do, and then why do they call it amateur hour?
Yeah, no, that's true. What class are you teaching right now? Because I know you trade just about everything.
I am teaching core strategy, and so all of our students are using ETFs and then practicing with that before they move into leverage. But next door at the center, we actually have Gabe Velasquez here from California teaching the futures class, and they caught that Russell trade, so that was exciting.
Well, I have to complain. I tell you, the last 3 times Gabe has left California to teach somewhere, it's rained in Southern California. So I'm going to have to ask you to end that class soon. And actually, you know what? Given the fires have been going on in California, you can keep Gabe for a couple more months, right?
Right. Yes, you guys need the rain.
We do. All right. So what were some of the other topics of jour, Tilly? I know that you're always out watching things and teaching with your class out there. What were some hot spots for you today?
It's pretty cool because I heard you there talking and all the listeners asking questions about the strength of the weakness, if you will, the move today compared to the bigger picture and the trend, and just everyone recognizing that we had a move down. And we've had a little bit of a downswing here yesterday and today, but overall the demand on the S&P specifically, we got demand there at where we at 309 a share. That longer term demand, and so keeping an eye on the longer term, bigger picture, and just kind of understanding the that uptrend, and as long as it does continue to hold and then turn back again, that trend is still intact. But keeping an eye on those highs, and if those highs are not broken, then we can, maybe get some more of the selling action going.
Sure. I mean, either way, today was good, and you're right. It did come right back down into a demand level, and I still think the strength is there, especially the way that we ended. We shrugged off a lot of the trade war news, and of course, a large part of that intraday move we saw today was statements from China basically waving the finger at the United States going, no, don't you guys start trying to put more rules on us, stay out of our business, which, as America, we love to get in everybody's business. So it spiked down, but you also had some nice earnings today. You had Target, you had Lowe's, so the numbers, I think, just still have those people very positive and buying and shrugging off that trade war announcement, which I think we all agree this is probably just a reality show TV tactic. We'll say it's not going to work today, and then my guess is by Friday we'll have some huge advancements, and phase 1 of the trade deal with China is going to happen.
I'm sure.
Going to go back up. Talk to me about energy, Tilly. I know you mentioned something about Valero today, and I don't know. It's not one I normally look at. When I trade oil, I'm usually doing ETFs. You had Valero on our watch list today, so talk to me about Valero and what you're seeing there.
Yeah, well, kind of leading up to this weakness in the S&P and in the broad market, different sectors can kind of give a heads up, and that selling pressure can be like a domino effect from one sector to the other sector. And so, the relationship between crude oil and currencies and stocks and bonds, they're very dynamic. And I think whenever we can kind of catch that money flow into one or the other market, today the strength coming into the bond market, the bond market gapped up and kept on going. So there's, obviously, if the banks are positioning long bonds, and these are bond prices, then that weakness, of course, coming into the S&P. But we started to see that weakness earlier in the energy market. I know you were analyzing crude oil before the break, but yesterday, a lot of selling in the energy markets, energy stocks, and crude oil companies, and markets like that can kind of give a heads up, so if a short, does set up on the small caps or the NASDAQ or the S&P, kind of giving a leading indicator, if you will. And that relationship changed, but it's very cool when you see it happen.
Sure.
So Valero just had a nice fall off of those highs there.
Yeah, TJ, bring that chart back up. Valero really did have a couple
Yeah,
days of.
great.
If you're long Valero, the last couple of days have not been something you want to talk about. I mean, you're looking at almost a $10.
No, yeah,
$10,
but that S&P just keeps pushing up higher, and looking for anything as far as a correlation to be able to kind of assess when that weakness is going to come for a correction and money flow coming or leaving a market.
Mm-hmm.
So I did a sector rotation analysis, and energy was the most interesting early in the week on Monday, in preparation for trading for the week. So that kind of, I think, led the sentiment for the selling in the market today. And then that's always interesting when you can find a sector that's giving some relative strength, like you were talking about earlier.
Sure.
And we just found that Valero, I think, was the best short-term short that we had, for sure.
Look at TJ. So you were looking at some charts here earlier. I think you should just take a peek at this one. Here's Valero Energy, and this is going back into 2018. I just want when we were looking at kind of the longer term picture here, it's kind of important to analyze things. I think we could all agree that whatever the malaise or problem was for Valero for, let's say, the early part of 2019 is really just kind of consolidating. We broke through, and right around we'll call it October, mid-October. It finally broke through these highs for the last, we'll call it 18 months or maybe a year. That's obviously very positive. Now check out XLE, right? Valero is a component of XLE.
Mm-hmm.
XLE has a bunch of different energy components. This chart, I think we need to zoom out a little, TJ, to see the same thing. This has not recouped at all. So when we add in solar and crude and other things like that and oil companies in XLE, it's certainly not showing any strength, right? It's just kind of really compressing, getting narrower and narrower as far as ranges goes. From a practical investor perspective, do you do analysis like this and say, I know XLE is doing poorly, but I can still go buy energies within that sector by maybe picking apart that ETF and finding the ones that are strong?
Oh, absolutely, and that is a big part of longer-term investing, and products like USO also and XOP, looking for those markets that are cheap and looking for that lower prices. Warren Buffett is one to have firsthand bought into a market when it's at bargain basement prices. So when these sectors are at the floor, and we know that seasonality and winter and different times of year can also impact the rotation there. But whenever a market is that bearish, looking for early signs of institutional investing and accumulating that product. So I don't know what the lows are there on XLE. I can't see that well. But yeah,
for the
whenever
year,
we trade down that low.
Yeah, 2019, you're about 53.42.
Yeah, so finding those really low-priced ETFs and then going in and finding which stocks are more bullish to lead the way, if you will, if we do get some rotation there, because crude oil itself has seen quite a rotation already.
Yeah, and this is why I actually like to use multiple monitors at home. I have 3 monitors set up, and why I don't dive too deep into that anymore, but occasionally when I'm looking at stuff like this, I do find it interesting because when you look at an ETF generally, unless you're looking at something like GLD or USO, generally it's a basket of securities, and within that basket you're going to have some that are really weak, you're going to have some that are really strong, and the average comes out looking like this chart here. So don't take this visual that TJ has up as a representation for all of energy. It's just the basket maybe as a whole, yes. But there's some in there that are providing some great opportunities to the upside, and this is really where it breaks down to analysis and the time you put into it. So like I said, I have 4 charts, so I'll have a list of the components of different ETFs. So I kind of go through the different S&P ETFs for XLE, XLF, XLK, those type of things, and the components for each one of those. So there we go. All right, Tillie.
Yeah, that can really help whenever we're analyzing the broad market to get a better assessment of that strength or that weakness coming in on those highs and those lows.
Yep. found some good opportunities in there. It's both long and short, right? All right, let's take a quick break. We come back. I want to go into a listener question about the upcoming elections. All right, we're not going to go into pontificating about who should win or why they should win or anything like that. But Ellen says, I'll let you just kind of think about this one, Tilly. Ellen asks, with the upcoming election, what is the best course of action for a retirement account? All right, we'll look into that when we come back after a quick break. Tilly Allison is our guest. If you have questions for her, send them on in at powertrainingradio.com by clicking Power Blast, or go to our YouTube channels. Join Ruben and Unscammable and Brendan and others on our YouTube channel at Power Training Radio, as well as Chris and Sean and Dana on the Online Training Academy YouTube channel. Send them on in. Send those questions in. We'll be right back after a short break.
Learning this way is fine when the stakes are low. But when the stakes are high, you need to rely on skill, not just knowledge. At Online Trading Academy, you build your skill one step at a time. We teach our students to trade and invest with a strategy, not a hunch. You learn our methodology, then practice it. You get to make mistakes and ask questions, and watch instructors make live trades. Develop your skill the right way. Click here to get started with Online Trading Academy.
Meet Mac. As a trader, he liked the signals that came from technical analysis tools, but they didn't help him find the best trades consistently, so he searched for a new approach. Mac attended Online Trading Academy's free class and discovered their core strategy, a trading methodology that spots when big banks are likely buying and selling, so everyday investors can too. Mac carved out a path to trade and invest with confidence, and so can you.
You've been listening to Power Trading Radio, live, fueled by Online Trading Academy. To learn more, visit us online at powertradingradio.com.
Hello, everybody. Welcome back to Power Trading Radio. It is your Wednesday edition. We are joined by Tilly Allison, who's out in Kansas City today. We'll tell you about her upcoming classes here in just a little bit. Before the break, I read a question out from Ellen, who sent this one earlier today by Power Blast. So thank you, Ellen. If you would like to send in questions, you can do so 24 hours a day, 7 days a week by going to powertradingradio.com, clicking that Power Blast button. Of course, you can also find out more information about any of our classes by just going to powertradingradio.com and clicking that free class button. That's an easy way to get in touch with us. Ellen says, with the upcoming election, what is the best course of action for a retirement account? Tilly, I know that you do a lot with proactive investing or strategic investing. Is there a change of direction? Is there a strategy change that needs to be implemented when we go into an election year like we are in 2020?
Well, the great thing about strategic investment and managing our longer-term investments and realizing we can be more active or we can be passive. So first looking at the more passive approach, which is being very defensive. And given that the market is at all-time highs and any type of approach, this would be a great time to be a little more defensive, meaning that most traditional investing models are going to base investments based off of our age. And we find that to be terribly, terribly flawed because we don't believe, and I don't believe in anyone at Online Training Academy, that our age should determine our allocation. If the market is high and we've earned set amount of return, if we can protect those gains and do some reallocation. So given where the market currently is, whether we have the same political party, again, in office or a change, becoming more defensive is always going to be the best approach. Mm-hmm. And allocating into a little more conservative market would be the best approach for two reasons. Because the market's at all-time highs, and then also given any type of transition and economic conditions that there's uncertainty, there can be some volatility there, and there can be some turns to the downside.
Sure, and I for Ellen out there, it goes back to, especially with proactive investor and strategic investor, it's really about just staying the course. And as we've mentioned, right now the course is to the upside. You're at all-time highs, markets are still moving. So I wouldn't change anything with regards to allocation. Maybe you rebalance your portfolio, which you should be doing periodically. Yep. But there's an opposite. Basically, it's like you're driving down the road and you can see something in the middle of the road. That something in the middle of the road is the election, and we can maybe just swerve right around it. Obviously, you don't want to go hit it head on because you don't know what kind of damage it's going to do. I think the prudent thing to do is not, you better dump everything and go short because the market's going to go to hell in a handbasket. No. That's not right. But we could take a more proactive approach. And one of the things, Tilly, and I'll throw a couple of them out there. If you're really nervous about it and you think, the Democrats are going to win the election and all of a sudden the market's going to just crater, one thing you could do is you could be buying puts on your portfolio for protection. You could be selling some options too and maybe buying once it drops to lower levels, or you could just go to cash if you're really worried about it. I think those are 3 simple things that you could do.
Yeah, I agree. And the great thing about the reallocation that you mentioned, Merlin, if she's doing that reallocation regularly, and I'd love to find out if she is, that's where the options component can be very helpful. But a lot of people right now, they're just long and they've been long and they're like, oh no, all of a sudden what do I do? So it'd be really great to find out how active is she.
Yeah, it's always a good consideration to figure out what are you in here. 2 things. One was said, where was that question? Hey, Joe Campbell, welcome back, my friend. Let's see. There was a question that came through about, I can't find you guys are so active out there today, but basically it was about, a hedge, a proactive approach to hedging, and certainly gold has a place in that portfolio, but what and I'm concerned because I see a lot of you guys are just buy gold, buy gold. What I wouldn't do is I wouldn't put my entire portfolio in gold. I think it has a place, a certain allocation, but that is a pretty volatile asset out there, and I don't think you want to go all to gold, but certainly I think that has a place in your portfolio. From a proactive investor approach, what do you generally have guidelines for, how exposed we should be to the commodity markets?
Oh, generally less than 20%. That's generally the guideline. And of course, if one were to increase it more than that, that would be a pretty generous exposure. To increase it any more than that would be, someone who wants to participate in those commodity-based, those products, doing a little more active trading and knowing what the risk is, and therefore taking on a little more risk with that additional volatility. And gold can surely swing either way.
Yeah, absolutely.
And I do believe, were you guys looking at it like on a weekly time frame? Yep. It has begun to rally a bit off of weekly lows. Last week it hit a low and reversed. But we just don't know how long the rally can continue because there's a whole bunch of supply overhead. So, the question is not where you're getting in. The question is when are you getting out? and that's this, what you want to take a look at there and realize that there is supply overhead. So if you are in a position like that, what's recommended is to be very mindful of the risk and have a plan to manage that and protect the investment. So if it does turn around, having stops in place and targets, very, very important.
Yeah, and I think that you mentioned the weekly chart here, which I think looks great. Weekly chart looks great for gold. And again, we had conversations about bullish flag formations. If you look at GC, TJ has it up here, the GC, you guys can see that on the weekly, you could call that a nice bull flag formation. It does look pretty strong. I'm optimistic on gold. I think that if things start to fall apart, gold will be a much better play. Right now, with all the optimism circling, I know a lot of the stats and figures out there paint an ugly picture, but the markets still kind of absorb it and move on up. William sent in this power blast. Says, Merlin, you mentioned shorting the markets. Given the prospect that this house of cards might fall, given the lack of supply for many ETFs, would you consider shorting things like these triple leveraged ETFs, Tilly? Well, I know coming out from a proactive investor approach, what would be the problem with these triple leveraged inverse ETFs?
Well, unfortunately, they have the ability to lose money based off of time. So in order for a double or triple product to be able to make more money exponentially in a low time frame intraday, which they were designed to do, they're going to have to offset that, and they will lose money over time if held in a position over time. So the longer term held, the more loss in what's known as time value, and that can be significant, and it can truncate any gains for the position.
Yeah, my main concern there is there's no need to use them right now. If you're using a triple leverage inverse ETF right now in these equity markets, you're getting smoked. All right, these markets are still showing a lot of strength. So if and when we get to a point where we've topped out, we start making some new lows, and all of a sudden you can start to see some selling pressure coming in, some new supply levels forming, and it's ripping through demand levels, then I think there's an opportunity for them. But you really got to be careful, as Tilly points out, there is a time decay factor, and if you just hold on to, it doesn't matter, long or short, triple leverage ETFs, they will lose value every single day. Even if they're moving in your direction, they can actually be losing value. It's a weird thing the way these are constructed. So, William, I'm not a huge fan of those. That said, 2008 was a great year for me because of SDS and QID. I was only the double shorts, but it was also about, I had a plan in place, and I said, if we break 1260 on the S&P 500, I'm going to short this market. And I followed my rules, and I was rewarded for it. But It was all based off a plan, and of course the market had sold off from a much higher number, right? It peaked at 1576, I think, was a high in 2007, and all of a sudden we fell all the way down to 666, so one hell of a move. All right, Tilly, tell me about your upcoming teaching schedule. Where are you going to be? I'm guessing Kansas City, right?
Yes, but I'm also doing Hour with the Pros here online tomorrow, and love that because I get to see all of my students from all around the world virtually. And we're talking about expiration, the different products that expire, so contract expiration for different asset classes and the impact that can make. And a lot of people don't realize when they get into different products that expiration days can impact volatility. It can impact our analysis. So I'll be doing that, and then teaching classes here in Kansas City, and having a great time with my new baby boy. He's 4 months old, and so, looking forward to celebrating the holidays.
Have you already started him trading?
He has not shown a whole lot of interest in the chart. He likes television. He likes television a whole lot better.
We'll have to wean him off that one. Well, Tilly, thank you so much for joining us today. We really appreciate you coming on. And again, congrats on the newborn, and we'll look forward to having you on. If I don't talk to you before then, have a fantastic Thanksgiving, and I'll probably talk to you in December. So thanks for joining us today.
Awesome. Yes, Merlin.
All right, take care.
Take care. Bye-bye.
Bye. Guys, it was Tilly Allison. She is pretty much grounded out there in Kansas City. She teaches in Omaha and Kansas City. She's all in that region area. If you'd like to know more and take classes with Tilly Allison, or if you're in that area, I would encourage you to click that link showing up in your social media right now. Online Trading Academy has 50 physical brick-and-mortar schools around the world. Each one has free classes, paid classes, community events. Each one has all sorts of resources to help you achieve your financial goals. It does take a lot of hard work, and you're going to have to put in some time and effort, but with the right guidance and strategies, things become a lot easier. Again, if you'd like to know more, click that link showing up in social media. If you're in Kansas City, well, you're going to have probably Tilly as an instructor, but there are well over 100 instructors for Online Trading Academy from all over the world. So we got a great pool of instructors and traders to help teach you this stuff. All right, I was going to go take a commercial break, and I just thought, you know what? Nah, I'm not feeling like taking a commercial break today. So what we're going to do is we are going to go past the Wednesday announcements. By the way, Lowe's had good earnings, so did Target. Wait, Lowe's? No, it was, I think Lowe's and Target had good earnings today. Let's look at your economic calendar for the 21st. For the 21st for the U.S., we've got unemployment claims, natural gas storage, and the Philly Fed Manufacturing Index. When you look at the euro, German final GDP numbers, as well as consumer confidence and the German industrial production numbers. British pound has monetary policy report hearings. Canada with ADP non-farm employment change, and then Australia with manufacturing PMI and flash services PMI. All right, moving me over to the earnings calendar things, TJ. There we go. The earnings side of things show not a lot of big names. There's a couple retailers out there. You have, from the retail side, you're going to have Gap, Macy's, and Ross Stores. You also have Intuit, Splunk, I just find that the weirdest name, Stone Co., and there are others out there reporting earnings tomorrow, but that is the bigger names, the bigger market cap names out there. Let's see, last for our guest for tomorrow, I don't even think I have a guest tomorrow. I think it's going to be just me here in studio, which is fine. I always love to answer your questions. You guys always seem to send a bunch of them on in. So if you have questions you want me to address on tomorrow's show, like Ellen, I saw Cliff, I didn't get to your question. I'll get to that one tomorrow. Send them on in at powertradingradio.com. The sooner you do, the more it gives me some time to prepare. It's been pretty crazy over the last few days, but I hope I'll get to all your questions for tomorrow's show. Until then, happy trading, everybody. We'll see you tomorrow. Take care.